Good morning. It's Friday, April 5th, about 5:30 a.m. Central Time. Over at the precious metals are weaker after yesterday we saw gold hit all-time highs 23.25, silver hit contract highs 27.45. Now yesterday the dollar continued to sell off throughout most of the session. However, about halfway through the trading session, stocks and indices really started to bleed off. They took a nosedive and they finished on the dead lows. There was a lot of anxiety surrounding an escalation between Israel and Iran that really took to begin shape. So while the equities declined, one key note was that crude oil futures began to surge. It was one of the highest closes since October. We saw Brent crude punch through $90. We saw WTI punch through $86. Normally with these types of developments, with US equities selling off and essentially crashing, we saw about a 120 point range on the S&P 500. We also saw quite a bit of volatility where the crude oil market was making new lows on the session and then turned up and blasted off and was just punching out new highs into that afternoon hour. Normally you'd see gold futures rise, and I really believe that they still may if you get an escalation of a geopolitical event here. It was really the dollar index's late rally that pressured the metal complex. So we saw a liquidation going on in foreign currencies. The dollar index came off of its lows. It was down around 103. We closed the session about 103.50 and we started to push higher and grind higher. Now we're at 104. So if you look at this conflict here, and if it does escalate to that, the conflict between Iran and Israel, Iran is an OPEC member, and then you also have Ukraine strategically striking Russian refineries. Russia's an OPEC plus member, not really an OPEC member, but the plus member that coordinates with OPEC to try and jockey around prices. I gotta think that December crude 150 calls, 125, 110, whatever, kind of look interesting if oil is going to continue to accelerate higher, and it could be a small lotto ticket like how we looked at $2,500 gold options 6 months ago. We look at silver options that are the $30, $35, $40 strike. Why not throw that in the bucket as well? And if the US equities are going to roll out over, why not look at a put option on the S&P 500, 5, 10, 20% lower from here? It's just a lotto card, and it's just a bit of insurance here. So looking at some levels, some strategies, some risk events that could occur here today. You could see that escalation. Some of the news reports that were coming out was saying that intelligence said that Iran may strike Israel sometime over the weekend or on this Friday trading session here. So you could see this really take a nosedive here into the end of the session or into over the weekend here. So our key data point though today is going to be at 7:30 a.m. Central Time. The payroll data, the non-farm payroll data, expected 212,000 jobs, but it could be a non-event given the broadening of a conflict. You got stocks, gold, Bitcoin, silver, all near these monumental highs. So part of the thing that I know a lot of you guys are going to ask, and as far as with gold selling off yesterday and going negative, and then silver having this wide range down, US equities having this wide range down, and then Bitcoin's down about 2% right now, was just at that 90 or 69,000 hour level. Why would people take those off? And really, it's a rotation. You think about where you're at in your portfolio. So most people have a benchmark that they want to beat. So they look at the S&P 500. What's it average? 8, 12% a year, 15% a year. Throw on some NASDAQ, get crafty, you get that 15 to 20% per year. Most average investors are satisfied with that kind of return. It's like you beat the benchmark. Okay, we didn't hit the cover off the ball, but we've done a great job. Well, if you look at where the S&P's at, it's up like 7-8%. You look at where silver's up probably about 9%. You got gold up probably 7-8%. Why not trim some of that off and go into bonds? And before you crucify me, you're going to get a 5% return. That's where bonds are at right now, short duration bonds. So you go into something essentially somewhat risk-free and you get 5%. You already clocked out this much, say 8%. Now you got 5%, you're at 13. Come back once the dust settles and try and reposition for a fall into winter rally, which is the seasonal tailwind. So that's all that I think that people are thinking, is that if there's anxiety, take things off at the moment. Now your critical levels on the S&P 500 right now, I think are 5220 to 5230. I think that's kind of your upper end range here, and we're sitting just off the highs of the day, and that your critical levels of support are going to be about 5160 down to 5150, your pocket support. So if we come up into that resistance zone, perhaps looking at a downside move or trimming some long positions off might be advisable. I think on the dollar index, still your line in the sand is that 105 level. You don't want to see it get above there. And then, if you've been sidelined on the gold and the silver market, start outlining some strategies like I did on yesterday's video. So on the gold market, the low was 22.86 today, high 23.15. We're trading right around it as of this recording. I think 22.55 is a great level here, and it starts where the gap was at. And then 22.05, a psychological level with a stop loss down at 21.65. This is just an example. So if you bought 10 ounces of gold at 22.55, your stop 21.65, you're risking essentially $900 on that one. You add one more position at 22.05, keep the same stop loss, you're at about another $400. So it's $1,300 risk. You go to something on silver, it's going to be like 26.75, somewhere in there, your first level support. You could start to look to add positions below. Your line in the sand, though, 24.65, I think. So couple ideas for you, a couple strategies to think about. You got any questions, give me a call, 312-858-7303. I'll be on the Schwab Network in the afternoon with Oliver at about 2:40 p.m. I'll put an article out on Kitco. I'll also post a video on Zero Hedge as well. So you got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.